All right, good morning, good afternoon, good evening, everyone. The 29th of April. Hope everybody had an awesome weekend. Let's get this show started. You'll notice I have this tool here on my chart. This was sent to me by one of our community members. I'm trying it out. So far, I like it. It's based on moving averages. And so it averages very similar to this, what I'm already using. And so I'm just keeping it on here just to see how it relates to the facts. And then if I like it, I'll keep it and I'll remove the ATR. We'll see. But for now, we'll just stick to our common process. Let's bring up the calendar. Double check the calendar for today. Let's figure out what we're walking into. Bottom of the hour, we have the Fed Manufacturing Index, and then an hour thereafter, we have a couple of bill auctions. We should be done trading by then. Keep an eye open on this. If you are still around, that tends to move the market in the last few months, or at least they have been. And then we'll see what comes next. Okay, so we're in the clear for at least 30 minutes. Let's go check out the daily chart. All right, on our daily chart, we can clearly see today is inside of yesterday, or what was Friday. And we have lower highs, we have inside bar, right? We have a higher low for now. The candle is green, but we seem to be coming off of the high, right? We'll go and verify this on an hourly chart. Right, so with the inside bar, we have to assume the mother bar bias. Right, so with the mother bar, with the mother bar being bearish, we have to assume bearishness remains. Right, we are still within this bearish environment, and so let's go sneak a peek on an hourly and see how we could maybe remain bearish. Right, so what if this little green nubbin turns into something a little bit more substantial? All right, well, I want to sell this and ultimately end up lower. Right, so how much of this do I want to sell into? Well, let's go find that out on a 5-minute chart. And then draw a ladder here. All right, so you need to highlight the ceiling, you need to highlight the floor. And then within that floor and ceiling, you're looking left and you're picking off previous support, previous resistance, previous levels where price reacted in the past, right? We're just looking at averages. These so happens to be standard moves on this particular time frame. You can see that the space between my lines is almost consistent, right? And I'm just using my mind's eye to draw this. I'm not purposefully trying to, even things out. All right, so already we can see from this swing low, from this floor, looking to our left, the market has rotated and now we are going up these rungs. And we are assuming somewhere in this resistance area right here, what was support will become resistance. And we're willing to participate in here on the short side of the equation. All right, so now that we have a ladder, we have a bias, we did our top-down analysis, we know we want to be selling, and we know we don't want to be selling when stuff's cheap. All right, so if we go and pick up a box, I think I have to redraw. Yeah, I have to redraw a box. I deleted all the objects. Sorry. Let's see if we can get that. How big is this? 58 by 3. 60 by 8. There it is. That's close enough. Actually, I'll make it a little bit bigger. There we go. So if I'm, I just changed it. Darn it. Let's adjust the size again. This is why I just reused the box instead of having to redraw it every day. I used a grid to help me build the box. 67 by 12, a little bit too big, a little bit too wide. There we go, close enough. And put this down here, put this one up here. All right, so we expect a move up to there. If we get there, we sell there, right? And then looking to our left, what do we have? We have this zone here, right? We already have this anticipated. Actually, we could draw levels in between the levels. All right, all we're trying to do is give ourselves a place to ask a question, right? It's a decision tree or call to action or an action point, right? Call it whatever it is you want to call it. At these levels, there may or may not be something for us to do. All right, so depending on what you're already in, if anything, you may add to what you already have or you may remove from it at one of these levels. All right, this is just creating a plan and multiple alternatives. On the left side, we're trading the facts as we see them through the box, as the box is being filled, right? So the price action is going through the box. And we're just reusing our targets, 3 pips, 3 pips, 3 pips, 3 pips, right? We're expecting to fulfill 3 pips multiple times within the boxes, right? There was a 3 pip trade 3 or 4 times here, right? Depending on how you played things. All right, so before the live session, I had I was testing the hardware, making sure my mouse battery was good and all that good stuff. So placed a few trades, and I placed a few trades last night before bedtime. Here we are, our goals, our expectations for plan A, right there. Right, so that's trade number 1, and this is now officially my box number 1. Right, so from here, I'm allowed 3 more boxes if necessary. Right, I'm just using this to measure how far we've moved from the low. All right, so far we've moved 2 boxes, and I am allowed to put money in the next 4, or sorry, the next 3. All right, so I'm selling the top of the box, selling the top of the box. I'll be selling the top of this box, and I'll be selling the top of this box. Right? If that's a big if, right? If the price gets there. If I'm at all lucky, or if my probabilities play according to plan, it should bounce from the top edge here and make me 3 pips. Right? If it fails to bounce, it's taking me into box number 2, which opens the door for more money to be spent, right? An allocation. I'm allocated the same amount of money per box. I just happen to have only clicked once here. I could have clicked 2 or 3 times. I'm waiting to see if I get another opportunity. All right, so I'll just put this back here so I can keep an eye on my units of measure. All right, and we'll keep this going. I just want to recycle a couple of trades here, or at least I'll put a second one. Right, I'm selling green candles into a resistance area. Right, what was support is resistance. If it comes here, it's in box number 2. It entitles me to spend box number 2 money. Right, so now I'd be looking to my left to figure out where in box number 2, where's my plan B? Right? Where's my plan C? Right? And then ultimately, I have plan D. Right? So I'm already thinking ahead. If these trades do not work, I add 3 more up here, that white line will move up, making it achievable, right? Making it reachable by price. It's almost like a tripwire, and I'm maneuvering where that white dotted line is, right? If I spend money, that line moves. If I take off a trade or close a winner, that line will move, right? So far, an average bar, according to the ATR, last 14, simple average is 2. This is 1.7. Let's double check what kind of calculations we're running here. Let's put this on simple. And this is looking at 15 bars, and I'm looking at 14. So I'll change this to 14. And so now we have the same number. And that should be closer to the truth. If I go to daily, I have 66. This is 61. Let's go double check what this is set up for on the daily. Let's change that to 14. Actually, no, let's leave it at 22. This is a month. Let's leave it at 22. This is closer to the real number. This is just an average of 14 days. And double check to make sure. $66.666. Yeah. Put this back to 22. Put this back to 12. And leave it on simple. Okay, so back to our 5 minutes. This ladder. Right, so we've gone up 3 rungs already. We're finding some kind of resistance in this area. Right? And we're selling that resistance. Right? We are selling this zone here. And we're willing to sell the next one, and maybe even the next one. All right, close a handful of winners, make 20 or 30 pips or so, and leave the casino. Come back and do it again tomorrow. All right. What I find myself doing is forward testing this strategy because I'm more or less with one of you guys every hour of the day. Right? But if it was just me, myself, and I trading, I would focus my energy on a couple hours per day and walk away. I'm just pushing my skills. I'm not trying to push my wallet. When I finish my 2 hours, odds are you'll see me in a demo account, you'll see me switching account, you'll see me doing something different, right? I'm not going to remain at risk a whole day. I no longer try to trade 18 hours a day. You know, that's newbie stuff. At this point, it's all about managing risk, and think of it like a casino. The house will always win. Right? So if you manage to squeeze a hand of poker and you can walk away a winner, do so every day. And this is what we're doing here. Right? Green candle, there's me recycling that trade. End of the month, I was looking at the end of the month earlier. Current month, we've done $1,000 of profit for the current month. Above that, we paid $330 in commission, which is appropriate for this strategy. Max drawdown per trade is 1/3% or so. We did about 1,000 trades. Right? My biggest win was a hedge trade for $69. We had 16 losers, and the single biggest loss was also a hedge trade for 211. Right? Overall, the average trades bring in about $1. Right? We've made almost 3,000 pips. And this is all 3 pips, 3 pips, 3 pips, 3 pips, 3 pips, right? An average of 2.8. I mean, that includes slippage in both directions. All right, so the strategy gives you a lot of potential, provided you force yourself to leave the casino every day, right? Make a handful of trades and walk away. Right? It's not like a race that you have to remain running until you can't take it anymore. It's quite the opposite. That's what we've done every day this week, or every day this month, right? We've just placed a handful of trades and walked away, placed a handful of trades and walked away. Some of them take longer to close, right? But we left the casino. We did not trade 18 hours per day. Right? That's what newbies try to do, right? We focus our attention on one time slot, on one time slice, and it's the same time slice every day. What I do, a lot of what we do is based on expectancy, and that expectancy is derived from showing up and studying the facts as they are, right? We're not approaching the market at midday expecting morning results. If I show up at midday, I expect midday results. If I show up at 8 in the morning, I expect 8 in the morning type results, right? Potential, average, yield, right? Keep bringing that up, right? Potential, average, yield. It's your paycheck. That changes with volatility, and that changes with time of day. And that's the one piece that you've been told to not pay attention to, right? Just wait. Buy low, sell high, just wait. And you wait and watch your profits come and go, because you don't know what you're waiting for. And here it is, right? Wait for the edges of the box. And then if you run out of time, too bad. Close that trade, or there's something here for you to do. Just like there's something to do on both sides of the box. You can create a box on any instrument and on any time frame. You don't need me to do that. All right? It's what you do with this box that's critical, mission critical, right? And that you don't change. It's the same thing all day, every day on all three sides of the box. Execution. And then just wash, repeat, wash, repeat, wash, repeat. I just need to take a look here for a sec. All right. Okay, good. Let's recycle this. If it pushes up here, I have plan B, plan C, I have plan D. I can work my way up to Z if I have to, or Z, depending where you are. All right. Looking at this very quickly, fear and greed, kind of quiet.
So we're looking now to the fear and greed index, 45 out of 100, which indicates neutral, while the crypto fear and greed index is at 67 out of 100, which indicates agreed. We're keeping an eye on the VIX in early trade today as well. It's currently near flat at spot 2% up at 15.05.
Beautiful. Here's our dollar index, which we take a look at every day. Right, we have support right there at 105. And as we speak, we are flagging or in a flag. If we take the flagpole and add it to the flag, it takes us up, to the 108s and maybe even beyond that. All right, so as long as we remain above 105.50, 105, the euro should be heading in the opposite direction. Right? And we have that policy divergence between the two continents. Right? So they're trying to look at their inflation a different way than Jerome Powell is looking at his problems. So we're going to deal with the facts. If the euro's at resistance, we sell it. The dollar index helps us confirm what we should be trying to accomplish. Right? The facts is the dollar index is made up of about 58% euros. It's not 100%. Right? So the index could be moving because of the yen, and the euro is just sitting here. Right? You guys saw what happened to the yen. Right? We finally tagged a level from the late 80s, 160 or so, and then they intervened. Right? And now with that intervention, it looks like they may have intervened twice in a very short span. So we'll see if it remains above 152. And if it does, then we're staying up at the top for a bit. Right? You got to break below 152 to be bearish.
In 10 minutes time at 10:30 a.m. Eastern, we get the Dallas Fed Manufacturing Business Index. Forecast -11 spot 3 on the prior -14 spot 4.
So there's a green candle. We're coming into that US news in about 9 minutes. I'm just going to sell that. I tend not to, I know there's news coming, but I don't want to fight the US, right? I don't want to be buying the euro. And so I tend not to bet against my favorite sports team, is what I'm saying. Just when it comes to finance. Otherwise, it's the Montreal Canadiens. Let's see if we can get into box number 3 or my box number 2. All right, I'm measuring the size of this move. It's already been 2 boxes or 18 pips or so, right? A move of 3 boxes or 27, 28 pips is not out of the ordinary, right? In this case, it would be like an 88% retracement, maybe. 88% retracement. Right, so it's not out of the realm of possibilities. I was trading futures before the live session just to get my feet wet. Trading NASDAQ in the pre-open. There was a gap to fill. I'll probably show you while we're waiting for this. There was a gap right there. Oops. Wow, what have I done? What have I done? Right here. That gap right there needed to get filled. And so we did that right at the open. And so that's where I made the money. Now we're selling the euro. You can hear from the tick tone in the background, volatility is picking up. Tick strike, like that RPM right there. the Asia session, it's like a heartbeat, very monotone, slow. And right now it's racing. It's interesting. I keep this in the background. If I'm not looking at the screen, the tone brings my attention back if it changes. All right, so here we are recycling some trades. If I see green candles here, I want to sell those. Right? We don't want to chase the red ones. Right? We want to buy stuff that's, sorry, we want to sell stuff that is expensive. All right, let's see it go green for a couple of minutes here. That'd be nice. All right, move back up to this previous low. Would give us a sell. All right, the low for today should be around the 6,700 mark. All right, 2 boxes below the existing low. All right, no green candles. All right, so a lot of people will be tempted to chase this. All right, sell red, sell, 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 and then as soon as they sell, that's when it turns green on them. And then, oh my God, oh my God, and they'll close their trade right there. And we basically sell it.
In 5 minutes time at 10:30 a.m. Eastern, we get the Dallas Fed Manufacturing Business Index. Forecast -11 spot 3 on the prior -14 spot 4.
Sell it twice. Right? Remember the plan, right? We play for the next move. Right? Everybody that's sold at the very bottom, chasing this, is now facing a green candle, and in their mind, it's like, oh my God, it's going to the moon. What have I done? It's not going to the moon. It's coming back from resistance. Right? And if it's finding a little bit more, guess what? We'll take advantage of it. Right? That's just how we operate. Right, so we've already allocated where that risk capital is going to be spent. We just have to see the price come to that level, and then we have a job to do. We know exactly what our job is. Oh, there it is. All right. My job is to spread that risk that I have access to as evenly as the opportunities are presented to me. Right? And so I can't be picky and choosy. I have to take every opportunity that's presented to me. I'm limited to 4 or 5 clicks, and it so happens that I recycle them more often than not. So I don't find myself running out of clicks if I keep recycling the ones that I have. Right? We're so tempted to put 1% in one trade, one click. That may work, but you have more control if you spread that 1% into 4 or 5 clicks. Right? And now that control is this white average, and I'm moving that white average within this box. I'm keeping it within reach, so to speak. Right? See, the market is going up a little bit. I have 1 click left to spend. I just took it. All right, so now I sold all 4 clicks in my box number 1. Right, this is my box number 1. It has my money in it. And so if the market pushes up into my box number 2, or a measured move would be 3 boxes. If it pushes up in here, I'm a seller and I already know where, and I'm not changing my size, I'm not changing my target, I'm not changing my stop, I don't change anything, right? I just know ahead of time, more or less, where I'm kind of willing to take a bite at the apple. Right? I understand this is looking scary because it's upside down, right? I'm selling when things are pointing up, things are green. It sounds like I'm kind of nutty, but this is convenient because it allows you to do things on the cheap, right? The next move is where you get paid, right?
1 minute remaining.
We postpone gratification, right? We plan ahead and we know when we'll get paid after the project, right? It's just like pretty much any other business out there. Right? It's not like you pay Ivy League education prices for 5 years and you make all that education money back in your first year. Once you're successful at this, you're unstoppable. You will have bad days, you will have bad weeks, you will have bad months, but you'll also have a skill that nobody will take away. Right? You can fix it. Right? We know how to fix.
10 seconds remaining.
We know how to fix the problem we put ourselves in. Right? So let's see if I bet against the wrong team. Might be a dud.
Still waiting. Minus 14 spot 5, minus 14 spot 5, that's lower than the forecast, minus 11 spot 3.
All right, so that might give us some selling opportunities. There's one. Oh, I have to go into this box actually. I have spent all my clicks. Bottom of the hour, we remain bearish. All right, any kind of a move back up, we want to sell it. There you go. Good job, fellas.
BNP Paribas expects the US Federal Reserve to start cutting interest rates in December versus the prior forecast of July.
I see you guys are posting in the testimonial folder there. You're doing awesome. Good job, everybody. Small, achievable, repeatable goals. Right, lower the bar as low as the bar can go. So stop dreaming about the home run. Just try to get your butt on first base. And then, repeat that process. At some point, you're going to find yourself forced to raise your personal standards. You got to cut the crap. All right, green candle. I've already spent my money, so I can't really recycle any. I'm waiting to see if I can close these before I can reopen them. And then if I do come out of this box, it'd be nice to see it go into here somewhere. Or here. Time will tell. And I'll get this video uploaded right away, I promise. I took all week to upload all of last week's videos. I got delayed. And this is starting to look a little bit like a flag. And so there is a potential for, you know, a break higher. I'm looking at this, something like so. And then if we have a flagpole, something like this, then we could potentially go up here. And so we would want to be sellers all the way here and then make our money on the way back down. Right? So if you're selling on the way up, your break even, that white dotted line will move up along with you. And by the time you put orders in the top of the second box, that white line will be somewhere between the two boxes. Oh, and look at this. All right, so this is why we wait and we don't put all our bullets in one shot, right? We don't just empty all your shots at once. All right, so let's see if we're going up into that upper box and we have a plan, right? We're waiting for this plan. Here's my trade number 5 right there. All right. Trade number 5. Yeah, trade number 5. All right, nice little flag, boom, boom, flagpole. Right
Oil
there.
futures extend losses. US crude prices fall by $1 a barrel to a session low of $82.66.
And then we'll take this, put that there, remove this, and go there. And we got ourselves a plan. Now, I ask you, is that easy? Maybe, but it's definitely not simple, right? A lot of stuff can happen in the midst of what we just drew here, right? So this is where our brain will run amok the minute you create the plan and something goes wrong with it. And if you don't have an alternative, if you don't have a plan B, you're stuck on plan A and you're married to plan A. You start to hope and pray that plan A will fix itself. Why not you fix it? Why not you interfere with plan A and create plan B, C, D, E? Ultimately, you don't change the outcome. You don't change the destination port. You deal with the weather, right? If you're a ship on the ocean, you don't change your goals, you change how you deal with the weather. This is what we're learning to do, right? I don't change the plan. I learn to deal with the weather. I just don't want to spend all my money at once. This is why we have allocation, 1% per box. And you only have so many boxes. You're not made of money, right? So you don't want to be putting it all at once and then withdrawing more to put more. Just spread what you already have with a bit more conscientious. And I'm removing the drawings so they don't interfere with looking to the left. Right. Bottom of the hour. Typically we'll have a pullback right around here. All right, that may have been it. and maybe it continues. And depending on where you are on the planet, it's already the 30th. All right, so the end of the month is already basically here. Last Friday was the big event. If you wanted to participate in April, last Friday was the day to do so. All right, today is April, but it doesn't really mean much. It's really the first week of May. Big week on the calendar this week too. I think Wednesday will be an important day for us. Come on, it's right on the edge of my take profit, right? I just want to recycle this trade here so I can put it back on somewhere maybe around here. That would be kind of cool. Or maybe there. Oh, just like so. Recycle. All right, so we've had 1, 2, 3, 4, 5, 6, 7. No, this is 1, 2, 3, 4, 5. We've had 5 winners so far, and I'm got another 4 more stacked up. We'll give it another 20 minutes. We should be able to hopefully flatten our book. What's happening with the NASDAQ? Nothing. Good, 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 good. So, if you have a click to spare, spend it here. So that's 1. If I get up here, it opens the door to 5. And if I get up here, it opens the door to 5 more. And lastly, if I get up to there. A lot less stress if you have a plan, and then all you do is more or less execute on your plan. If you just trade, willy-nilly, you get willy-nilly results. I'm waiting to see if I get to spend money here. Fun part of all of this is the waiting around, right? $12,006. All right, let's see if we can get paid now for some of this postponing. Nice, slow, steady day. Other instruments out there are probably, got your eye attracted, you know, that shiny thing in the far, far distance. That's how the market gets us, you know. It always has something that looks better somewhere. And so it has you given up on the good thing. You know, we have a good strategy, we have a good plan, we have a good way of milking the cow, and yet the market has you thinking, oh, I should be betting the barn over there. No, continue to milk the cow. Just focus what you're good at. And let alone, don't think about, you know, robots and AI and all that kind of stuff. It's just another avenue to lose, right? Just figure out your own strategy and milk it until you can do it with your eyes closed, right? People trying to make money with artificial intelligence, we are making money from their natural stupidity. Why reinvent the wheel? This is a probabilities game. The probabilities will always be probabilities. I can't tell what the next trade will be. I can't tell what the next bar will be. But I have a way of mitigating the problems when I'm wrong. And so that keeps me moving forward when I'm right, right? Because I understand that the fix is mine to figure out. The market will not bail me out with a silver platter. Right? No, 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 no. It will put my head on that silver platter at the first chance it gets. All right. So it's understanding where we fail, right? Eject, eject, eject. And then between here and there, it's up to me to figure out what my next move is. And if I planned a few next moves ahead, I'm not triggered by anything. I'm not drawn to look for that shiny thing in the far distance, right? I already have a plan right here. When you get bored, when things don't work, you're tempted to go find the next best. There is no best. Just deal with what you've got. If this works 80% of the time, learn to manage that missing 20%. Don't go finding a new strategy. Unless this is actually flawed for you. If this is breaking your brain, then maybe this is not for you. Right? But most of us that trade this method or trade in this fashion mitigate risk differently, and we don't rely on a stop loss to do so as much as a swing trader would. Right? So we have a different approach to mitigating risk. Waiting to spend money. Right? I'm waiting, playing like an insurance policy. I'm waiting to see if I'm stuck in a hurricane. I'm trying to figure out what my next move will be. I know how much money I'll be spending. I know where I'll be spending it. I know where my risk is going to be if I could do that particular trade. And so nothing of what I'm doing here is randomized, you know, it's based on the bar, the box, the whatever that's in front of me, and it's the same behavior over and over and over. Right? So we enter the box here. By definition, the price should exit in this area there and continue on. Right? That's if we are in a so-called trend. Right? That's just what we expect. Right? A continuation of the same move. Oops. All right. So because we entered the box in the bottom corner, mathematically speaking, the price should come to this corner here. right? It looks like it's done a pretty good government job of it. Let's see what comes next. Maybe we come here. Maybe we come here. It's a lot of maybes. You must be sick of hearing me say maybe. The best part is the potential is there that we could have our bias wrong and we're still somehow making money. If you have your bias right, so you have the right direction, making money becomes almost easier, simpler, less, you know, you don't need to be provocated. You don't need to be, stressed about it. This, when you're building a position, postponing gratification, the closer you get to box 4, the more anxiety you start to feel. And this is when you need to rely on, judgment, the years of practice, years of good and or poor judgment. And, you're up there because you allowed it, right? You're up there because there's a possible outcome that you are still in control of, right? And that's because you've been there before.
At 11 a.m. Eastern Time, we expect comments from ECB's Muller, who speaks at Estonian Business School Investment Club event in Tallinn.
Oh, here we go, right in the corner. Boom, boom. Mathematics. I still want to sell, but I want to sell when I get up into the upper box, right? Until we get up there, we could conceivably just be going sideways. All right, so if we enter this new box, the side, the one on the side there, maybe we are going here. Maybe we're going here. Right? If we happen to blast through like really, really quickly, something like this, like what we've done down here, the clue is in front of us, right? The unused time in the bottom box was delivered to us in price instead, right? So instead of going sideways for the full box, we went straight up for 2 boxes instead, right? See what happens here. Do we go up another box slowly but surely, or do we fly through and add another one, right? This is a gauge. It's allowing you to gauge the potential next move. If I could tell the market what to do next, it'd be a lot easier to teach, but we have to create both alternatives and sit here and watch and see what comes next so I can teach you what I think, right? I can't just show up with a curriculum for the day. This is what we're going to do today. No, we're going to do what the market tells you to do today. Okay. This is why we create plans. I still haven't given up, right, on postponing that gratification, right? Getting paid for all of this, right? We know the bias, right? I'm just curious to see right here, if I do this, what does it show? Oh, we're approaching 61%. If I put it here, we're already at 61%, right? Look where we are. So let's not, whoops, sorry, wrong button. Let's not be chasing this, right? Fear of missing out, right? Anybody that sees green, 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 they're thinking, oh, higher highs, higher lows. They're not looking on a big enough perspective, right? They have to take a step back and look outside of their 1 minute time frame, right? Look left, look where you are. Right? Big scheme of things. Oh, I am in my upper box. Yay! If I can see a reason to sell right there, I'll take it. Push, push. What do I have right there? Let's see if there's another one right there. So in this zone up there, a green candle up there will allow me to sell in box number 2. So that would be box number 2 money put in box number 2, right? So we're not borrowing from Peter to pay Paul. There's my green candle.
At 11 a.m. Eastern Time, we expect comments from ECB's Muller, who speaks at Estonian Business School Investment Club event in Tallinn.
And so I need kind of a push higher up here. I'll sell it. All right. And even if we're wrong, that's okay, because the space that we have between here and our ejection seat is the space that you require to fix the environment, right? You can choose to lose 1 or 2 trades and put them back to work at this newer level, right? You don't have to close everything. Close your most expensive loser, right? Free up that money and put that money back to work. All right, so there's now 2 clicks in box number 2, and I'm allowed 3 more. Let's go take a look at our daily chart and see. Right. Remember that inside bar? Well, we're still inside of it. We've pushed the low slightly lower, or did we? Yeah, we did. We pushed the low slightly lower, and the high still remains lower high. All right, so let's see if we can make an even lower low in the next few hours. Let's go back to our 1 hour. We came in, we had our ceiling, we had our floor. We spent an hour together selling this particular green candle. Go down to a 5-minute chart. Now we're pushing past 61 into resistance. Right, these wicks right here. Right, we want to sell that stuff right there. Right, so box number 2. There's trade number 3. And then I have trade number 4 up there. Oh, maybe I'll put it here. And trade number 5. All right, so we're planning ahead. And we are now postponing gratification. All right, I can take this box away and wait to see how we come out of this in the next little while. Right, this is just a unit of measure.
Shortly expecting comments from ECB's Muller.
If I can get up here, I'll sell more, and there, and then that's it. That's all I have allocated for that box. Right? But then I am allowed to sell more if we get here. Right? So this is just to let me see how far we've moved so far. Slightly better than 2 boxes. About 20 pips, 22 pips, 23 pips. All right, top of the hour. This is when we expect the London fix or the UK fix to come in. If you remember last Friday, at this moment in time, the bar started to get slightly larger because of incoming volatility. All right. Time of day is that circadian aspect of time of day is what we're looking to exploit. Right? There's a pattern to this. Still pushing into resistance. This whole zone up here. All right, all of this right there. And we have slowing momentum up on a 5-minute chart. Right, so we had a large candle, we have a medium candle, and a small candle. Right. Slowing momentum up. Targets on both sides. 770, or sorry, 670 on one side, so drop below the low, maybe 2 boxes, brings us to 670. And if we make a higher high, 2 boxes, brings us to 750. And so we know where we're wrong, and we know where to stop looking. Right? If I get to 670, I'm not going to push it lower. Right? It's unlikely to go much further than that. Much like if it gets up to 750, it's unlikely to go beyond that. Right? So this is it. We're limited to a day, and within that day, I'm only here for a couple hours. I don't want to get stuck beyond that. And so I'm trying to do the best that I can to potentially get paid all at once, you know, the next move, and then be done. That's it, finished. You know, but this, the waiting, the building the position, you know, the sitting on the edge of your chair, biting your fingernails. If you don't have a plan, that behavior will drive you nuts. Right? What we do is we create a plan and an alternative and multiple alternatives. And so instead of being all worried and panicking or anxious, we execute the plan. Right? And then we did the best we could. right? Even if things don't work out. Right, here's another trade number 3 or 4, sorry, right there. And I'm gonna push one more if we get there. Postponing gratification. You're gonna get sick of hearing me say that. All right, there's trade number 5 coming up, or is that number 6? I think I'm one too many now. Yeah, that's trade number 6 if I put one in. Trade number 6. All right, so my break even right here, that white line, is in the middle or is in the average of the two inner boxes right here. Right, so my break even is in the average. It's in the center of the two. I spread my risk. Right, so if the market continues up, I continue to spread the risk. Right, I'm allowed to do this. I've got it allocated for this job. I'm willing to lose this money. All right, so there's no risk. There's no risk to my psychology. There's always risk to the money. Right, but it's I have to keep thinking forward, right? I have to think about the ability to come out of this little to no pain, right? So looking at the bigger picture, what do we have? Well, we just broke this trend line right there. We have this. Right? Will we come back under? Or do we continue to go up and up and up and up and up? Right? This is the next question. Right? Our ladder, remember the ladder that we drew? Right? We're right there. The next rung's coming up. Right? We're going to run out of rungs if this keeps going. Right? So this is the idea. You have to look to the left and organize your thoughts so that you don't run out of money before you run out of options.
US natural gas futures extend gains. Prices reach $2 per million British thermal units for the first time since early March.
All right, this zone here looks very interesting. Right there. And I'm going to change this so I can pay attention to it. Right, I'm looking at this area here, this area right there, and where we are here. All right, I'm just going to remove this. I tend to favor horizontal lines instead of diagonal lines. A diagonal line has a different price at every point along its length, whereas a horizontal line has one price along its entire length. All right, so a horizontal line gives me more consistency, more accuracy. It's a yes or no question. No, a diagonal line leaves you bewildered along its axis, along its length. Right, so let's see a pullback here, right? A pullback, a retracement, a return into the original bias. Right? Lower highs, lower lows, just like we saw on the daily chart. Another 20 minutes and I have to let you go. I gotta stick with my routine. So when we look at it this way, our eye is drawn to the green candles, these green candles right there, and we neglect to look to the left. We neglect to see rejection, 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 right? We neglect to see resistance, resistance. Let's just see what comes of this. Maybe it is going up. No, that's okay. There's no reason to panic if you have a, you know, a way of sorting out the information, parsing the facts, and then, you know, trade what you consider to be facts, right? It's your brain is trying to trade a delusion, right? Your brain is trying to take it to the moon or take it to the South Pole. We have to take a step back, look left, and understand that between here and the moon, there's a lot of resistance. And between here and the South Pole, there's a ton of support. And so by, you know, lowering our expectations, limiting what we expect from this next move, right? So I'm looking at 10 pips, 11 pips, right? I'm not trying to get it out of the park. I'm looking at 11 pips. Right? I kind of engineer what I'm looking for. We'll see what happens. If I'm wrong, I'm wrong. And those of you following, you'll be booking losses at 36 pips. Unless you figure out a way to get out of there for less money, right? For less than 36. So how would we do something like that? Well, you can book the loss right now, or you can average your way out right now. You know, move that white line so that it's achievable and reachable by the existing price action, right? So average bars and so on and so forth, right? Average moves. You're not trying to reinvent the wheel. All right. So 1, 2, 3, 3 boxes from the low, right? This is box number 4 from the low. My entries are in box number 2, and so my box number 4 isn't until up there somewhere. Right, so by delaying the entry by 1 box, I bought myself this much space. Right, now let's see what comes of this next leg. Right, leg being the next move, right? Is this going to go like this, or is this going to go like that from that blue line? See that blue line here? All right. If it breaks on up, where is it going next? Well, we have 2 rungs above us, and ultimately we have a 3rd one right there, a 4th one in this zone up here. Right? We have a whole bunch of alternatives where, you know, the insurance company model as an opportunity to take a trade. Right? All we're trying to do is lower the damage by moving this break even. And that's if we're in trouble. Right? If this is factual, if this is going to work out, we don't have to touch a thing here. And this is where people throw in the towel and assume, you know, the market is rigged, or, you know, because everybody that sees the same thing will feel the same pain. Those of us that see things slightly differently, we kind of feel a different pain. We engineer a different exit. We'll see. No, well, que sera, sera, man. Whatever happens, happens. Let's go sneak a peek at Dixie. Dixie on the 4 hour. Dixie on the 4 hour is currently at support. Right? We are at support, 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 support. Right? Will this turn around and go back, or will this continue and go south? All right. Well, we talked about that 105.50, 105 area. Right. All of this right here. Well, here. Remember what we just drew on the euro? What about if we draw something similar here? All right, so if that's our dollar index, all right, 108, boom. So if dollar index is going in this direction, our euro is going to do something similar in the opposite direction. Right, so let's keep an eye on this over the next few days. All right, there's the potential that we get down to here. Right, so that could be a bullish euro before we see a bearish euro. Right, keep an eye open. Like friends say, keep your head on a swivel. Watch your 6 o'clock.
Fed bids for 3-month bills total $7.8 billion, and Fed bids for 6-month bills total $2.1 billion.
There we go. All right, so we're waiting for this right here. Let's get paid, go to the beach. Where's the stop loss from here? My first loser is 2 boxes away. I have tons of space. A little bit more. Come on. What's happening with NASDAQ? Still sideways. Nice. Not missing much over there. Come on. If you haven't had a chance to check out the YouTube channel, I uploaded all of last week's videos. Everything's all brought up. I haven't posted any of the evening sessions yet. I'm keeping a hold on those until I get a few more together. I may put them on a different sub channel or something. I may not put them together with Forex, so keeping that aside for now. Speaking of trading futures, tomorrow night, so Tuesday and Thursday. So we'll do that for the month of May. We'll start tomorrow. Okay, so 2 days a
Italy
week.
energy minister says the G7 energy ministers are still discussing potential restrictions on Russian LNG imports.
2 days a week for the month of May, Tuesdays and Thursdays, and I'll be online at 21:30, so 9:30 p.m. Eastern time. All right, 9:30 p.m. And then hopefully we'll be able to do stuff like this. All right, this is where I traded it this morning. Before the live session, I was short the NASDAQ going into the market open, or right after the open, sorry, right after the open. Here we are. Let's see if we can close some trades here. Come on, come on, come on. When it's just, threatening the stop loss or threatening the target, the exit, it's nerve-wracking. You're tempted to close it early, that microscopic half a second, and it just let it be. If it works, it works. If it doesn't, it doesn't. It will come around. We don't want to interfere with what's happening on its own, like what does not need to be interfered with, right? I find myself interfering with
At 11:30
the
a.m.
losers.
Eastern Time, the US sells $70 billion in 3-month bills, prior high yield 5.255%, and prior bid cover of 2.78. And the US sells $70 billion in 6-month bills, prior high yield 5.16%, and prior bid cover of 2.8.
So nothing changed. Right, so yeah, I was saying I find myself dealing with the losers usually in boxes 3 and 4. Right, so I've come to allow myself 4 boxes of space to feel comfortable to do the job I need to do. In the beginning, some of you may be better off using only 2 boxes and learning to lose within 2 boxes. Right? The average is between the 2 boxes, so you can still do the same job. Right? Except your win rate will drop a little bit, right? Because what I'm allowing myself in boxes 3 and 4, you would not have access to, right? But that doesn't mean you can't be successful, right? The losers that you're booking are also a lot less than my 36 pips. Right, so by learning to lose at 18, you lower the size of the loss, and you also lower the win rate. Right, so it's really not that bad of a situation to be in. Right, you're better off to learn how to lose when it's cheap, 2 boxes or less, and then over time you can learn to accommodate a little bit more space. Right? We're waiting to get paid. We're not trying to chase this to the moon. Right? This is a lie. Right? These green candles are trying to have us thinking that, hey, it might just stay green for a long time. There's no catalyst for that. Right? Matter of fact, there's a policy divergence between Europe and the US. Right? So it's even less unlikely that the euro keeps going up and up and up and up. Right, so we have technical analysis telling us probabilities, and then we have the macro fundamental analysis telling us what's really happening boots on the ground. The two don't line up. The bigger picture, boots on the ground, is more valuable in this instance. Technical analysis is astrology for men. You got to read between the lines. Right? Read between the lines. Come on. There we go. That's what we wanted to see, right? Come back into this little box down here. Something like that. Make it a V top. Another 5 or 6 more minutes and I'll have to let you go. But we have a plan. You know, we know what we want to do. Ultimately, we remain sellers of euros, right? We know the Dixie is bullish. As long as the Dixie remains above 105, 105.50 is the first level you have to be concerned with, right? So as long as 105.50 holds, our euro is going down. See how it's just tickling the line? There we go. Just leave it. Just don't touch it. If it takes another 10 more minutes, it takes another 10 more minutes. You have to remember in the world of day trading, where I'm not swing trading, I'm tempted or I'm trained to add to my winners, whereas a swing trader is usually trained to remove half their risk and let the other half run. Right? So that's the opposite side of the same coin. You either add to what's
At
working.
11:30 a.m. Eastern Time, the US sells $70 billion in 3-month bills, prior high yield 5.255%, and a prior bid cover of 2.78. The US sells $70 billion in 6-month bills, prior high yield 5.16%, and a prior bid cover of 2.8.
So the choice is ours, right? We either remove some of the risk and let the other half run, or in a winning situation, you add to your risk and you win more, right? So as a day trader, we tend to go for the latter option, right? We go for adding instead of removing. We have control over time, whereas the swing trader doesn't have control over time. All right, so a green candle, can I recycle this? Well, it'd be nice if it gave me the same trade again, you know, in that area. Right, if we get up there, I'll take that trade, that same one that closed. That's what kind of recycling is. All right, 3 more minutes. All right, those of you that want to trade along with the futures stuff in the evenings, I uploaded or I pasted a couple of links in the Ecofin group up here. All right, so if you want to follow along with the futures, you have a choice of these two providers. These guys here, Lilu, you can open multiple accounts for really, really cheap. It's a bundle kind of deal. This guy is the trade day operation is more of a community, more focus on the process, the prop process. Whereas on this one, it's more about getting you to manage the risk, getting you to win, getting you to experience futures, getting you to blow up for cheap without having to blow up the whole assessment, right? So if you're just getting your feet wet, Lilu is probably the better option, right? But if you have a little bit of practice at trading, trade day is more formative, right? It's more forcing you to play by your rules, right? So choices are there. Test them out. See what you like. Okay. And I'm running with Lilu. I'm running on their Ninja platform, and the data is from Rhythmic. No issues at all, none whatsoever. And so yeah, I'm test driving a couple of other providers also. Give you guys options. When you're trading futures in the prop world, it's mostly subscription basis, and so it renews on a monthly. But they do have options where it's a one-time test sort of deal. Okay, green candle, sell. I just recycled the trade.
US natural gas futures extend gains, prices rise to the highest since February 2024.
How many trades do I have? I have 12. I have to stop.
Shortly expecting the results of the 3 and 6 month bill auctions.
Yeah, so the way the calendar works with these bill auctions, so we have the scheduled bill auction at the bottom of the hour. The auction actually takes place at the bottom of the hour, and then the results of the auctions will be delivered a few minutes later. All right, so the fella that just spoke, they'll tell us what the results of the auctions is. So it's not published at 9:30, and the auction is held at 9:30. So a lot of guys will have their hands on their mouse right for 9:30 and nothing's happening. And then boom, 4 minutes later, 5 minutes later, all hell breaks loose. Will I be forced into my box number 3? Will the market use 4 boxes for a pullback? If it does, it's also creating our nemesis, right? That outside range. Right? That's a trader's worst nightmare. Fun, wow. All right. This is when people go nuts, waiting to see if all this work is going to work out or if it will fail, right? Is it going to continue in the wrong direction? Have I been wrong all morning? And so what, right? If I am wrong all
So
morning,
according to Israeli N12, Hamas says either an agreement on a complete ceasefire or no agreement.
if I have been wrong, I'm free to book some losses. Some. I don't have to book all of them, right? So I can remove one box and put that box back to work up here. I have a ton of liberty here, which I would not otherwise have if I was trading as a swing trader.
Three-month high yield, 5.25%, 5.25%. Bid cover ratio, 2.67, 2.67. The US sells $78 billion in 3-month bills and awards 42.75% of bids at high. And 6-month bill bid cover ratio, 2.98, 2.98. High yield, 5.165%, 5.165%. The US sells $78 billion in 6-month bills and awards 43.23% of bids at high.
It took about 4 minutes to get the results from the auction. Alrighty. All right, so here's our plan of action. All right, those of you following along, don't touch a thing. And if you're just showing up, if you're just starting now, you have to be concerned with trying to go higher. All right, so protect your top side. Make your money on the downside. All right, and I'll see you guys tomorrow, same time, same link. Hopefully same outcome. Talk to you soon. Good luck. Trade safe.